The important thing is when you look at financial markets, you need to realize that by their nature, financial markets are highly volatile. And when they get a lot of news or a lot of confusing news, you will see a lot of volatility. We are now in a period in which there seems to be a disconnect between the real economy and the financial markets. And therefore, in my judgment, in such periods, if you really want to have an assessment about the real economy, it will not be helpful to look at it through the prism of financial markets. We have seen in many countries financial markets expanding very, very rapidly and going up in prices. Don't forget that we have been now in 8 years of extraordinary loose monetary policy. Interest rates were driven to practically zero, and this fed the rise in equity prices all over the world. Some of these rises were exaggerated, and what we see now, in part at least, is a partial correction. Add to it the fact that we have had a lot of geopolitical developments. We have a crisis in Syria, we have a crisis of refugees, we have a crisis in Ukraine, we have terrorism. All of those at the end of the day show themselves in confidence or lack thereof in financial markets, but the real economy has life of its own. Well, I would not exaggerate also the decline in the Chinese economy, in the real economy. Yes, it grew at a very rapid rate, say 8-9% in the past, and now it is slowing down to somewhere between 6 and 7. It was not an accident that the Chinese economy is slowing down. It was part of a strategy. The Chinese government, as you know, has decided to switch its growth strategy from relying on exports and the production of manufacturing to relying on services and domestic demand. This means that growth is going to be slower. The demand for commodities from the rest of the world on the part of China is diminished. They don't need so much, so the rest of the world feels it. Russia is very dependent on the price of oil, and the decline in the price of oil is a big hit on Russia, and it comes on the heels of a slowdown that took place because the fact that they did not really do the economic reforms that were supposed to be done some time ago. So they became extremely vulnerable, and the fall in the price of oil has been almost, I don't want to call it knockout, but it's clearly a very hurting effect. It means that unless something is done, Russia is going to shrink in the coming years. Growth is negative, salaries are smaller, earnings are shrinking, so obviously they cannot continue in this trajectory. They will need to rethink their budget, including maybe even their military spending, because of the fact that the current situation with such a low price of oil creates a very big hole in the budget. There is a long-term implication, because who is suffering from the price of oil primarily? Countries like Russia, of course, countries that are oil exporting countries that have a productive base that is very narrow. Unless you diversify your productive base, you will continue to be vulnerable, and that's a very unhealthy situation. To be able to diversify, you need to have reforms that increase flexibility to the economic system.